Hello everybody, Wesley here. Today I wanted to talk about asset allocation, and the reason I picked this topic for today is that I was reading on the news, it was either yesterday or this morning, that Jeff Bezos, the CEO and founder of Amazon, lost something like $17.8 billion in 2 days. It's hard to fathom having that much money to be able to lose that much money. But today is not about losing lots of money. Today is about preserving your money, and that's why we're talking about asset allocation. Now, asset allocation is an investment strategy to have your money in different places, namely stocks, bonds, and cash or cash equivalents to balance your risk and your reward. And so I have 3 portfolios here. These are pretty standard. I just found these online. You can find tons of different asset allocation strategies. I have kind of made my own, which I will share after this. But I wanted to run down through these. So the first portfolio would be 75% stocks, 20% bonds, and 5% cash. So this one would be a younger investor such as myself, where you'd have more in stocks, which are riskier, and less in bonds and cash. Well, of course, they're not as risky. And so with portfolio B would kind of be middle-aged. You'd have 70-20-10, so you'd have 5% less stocks, and you put that and hold that as cash instead, so again lowering your risk. And then portfolio C we have at the end is 60 stocks, 30 bonds, and then 10% cash. So the reason this would change over your lifetime is that as a young investor such as myself, I can afford to have the risk. I can afford to have a larger position in the stock market, namely in stocks and equities, because if we had a market crash or a tumble, which we've been seeing through all of October, I can afford to lose that money. It sucks to say that, it's not fun, but I work, I can afford to lose that money. Now for portfolio B, for an example, would be more middle-aged. You have a family, you have a house, you have a car, you can't afford to lose as much because you have a lot more obligations to meet. Now portfolio C, this would be for if someone is nearing retirement or someone who needs a steady income that isn't going to vary a lot. These are ones I just found on the internet. You can find all of these. I find that when you start investing, you will find an asset allocation strategy or method that works for you really well. I do not really follow any of these. Again, I'll share mine after we go through this. So the older you get, the less stocks you hold. I put a little asterisk there because I'm not an older investor, but that's not something that I plan to follow. My suggestion is, of course, I'm not a certified financial planner. I don't have any formal experience. I don't have any certificates. I'm just a do-it-yourself investor. I read a lot, and so I would suggest ETFs, index funds, or dividend funds. I know Vanguard has a lot of low-cost, really nice dividend funds or index funds that for portfolio C, if you were older, I would still hold a higher amount of stocks rather than bonds. Bonds have not been doing good lately with the interest rates. It's not worth putting away $10,000 or $20,000, and then after the 5 or 10 years it's worth less. That doesn't make any sense. When you invest your money, you need it to be worth more while you count for inflation. And so that's why I would hold these 3, just to name some. REITs is a good one, maybe some big blue chip companies, some blue stock companies. And so being myself, I'm not older, but for portfolio C, I would still have more in stocks than in bonds. I'd probably follow more along this, but my stocks would be more in funds such as ETFs, index funds, or dividend funds. Before I get into my side of the asset allocation, I just wanted to say that this is only in the stock market. I believe that everybody should also be invested outside of the stock market, even though those things can follow the stock market really closely. I want to buy real investments. I want to go and buy actual properties. REITs are awesome and all, but you can't build the same equity, and you can't leverage those houses the same way you can with a REIT. So this is just for the stock market. Make sure you have your wealth from different incomes and from other real assets and real properties outside of the stock market, just in case of the stock market crashes. You can still have some things outside of the stock market that will still help you keep afloat. For my asset allocation, I would, so far I've typically followed the 85% in stocks, and I like to keep cash. Now the reason I like to keep a lot of cash is that Warren Buffett has famously said that when others are fearful, you need to be greedy, and when everyone is greedy, you need to be fearful. And so when the stock market crashes and everyone is really fearful about it, you need that cash, you need the capital to be able to buy shares in all of the companies that now have a stock price of way lower, like 50-60% lower than their normal trading value, and then you can get in and buy all of these highly undervalued stocks in these undervalued companies. And he was really good at that. He would save up a lot of cash. He'd always keep over 10%, and when the big stock market crashes happened, he would be able to buy a lot of shares in companies, and then as the economy got out of that crash, then his wealth would expand immensely because he had been able to buy all of these shares in these companies with all this cash. So I try to keep as much cash as possible. Sometimes it's hard to stay exactly 85-15. Right now I'm like 95-5 because I have bought some stocks during October as they have declined. And then as I get older, of course, I'm not there yet, but my plan is to move this 85% stocks. I'd still like to keep most of it into the stock market, not into bonds or CDs or GICs, but move those into ETFs and Vanguard funds. I've been looking at some Vanguard funds that look absolutely phenomenal, really low interest rates and fees, and so those look really good. I would do that. For everyone, it's going to be different. So as you start investing and as you start going through your strategy of asset allocation, it will change. This may change. Maybe I want to hold more cash. The more the better. I'll probably never hold less than this. Maybe I will incorporate gold into my allocation strategy. It needs to morph as you change, as you get more capital, but you always need it to balance the risk you have in the market compared to the reward. Since I'm younger, I can bear more risk, and that will hopefully yield a higher reward. And so that's it for asset allocation today. Thank you so much for watching. I hope you learned a lot from this. Leave a comment down below. Let me know how you liked the video. You can also go to my website. I will leave that down below. You can follow me on all the social medias on Instagram and Twitter, and you can also sign up for my newsletter, which is on the website. Thank you so much for watching. Have yourself a wonderful day.